Jer Thank you, Geraldine, and welcome and good afternoon to all of you who are joining us today. We're really glad to have you. As Geraldine said, this is part of a collaboration between the Chicago Department of Business Affairs and Consumer Protection and SCORE Chicago. And because you may not know everything there is to know about SCORE Chicago, I'm sure you do not. Hopefully, you'll indulge me for a couple of minutes just to tell you who we are and what we do. Um, SCORE is a resource partner to the United States Small Business Administration. We've been around since 1964, which, if you're doing your math, is over 60 years now. We are essentially a nationwide network of volunteers, nearly 8,000 of us across the country. And Chicago, as you might imagine, is one of the largest and most diverse groups in the country. Today, we have people joining us from as far away as Florida and Texas, I saw on the chat. But we focus on Chicago. There are SCORE chapters around the country. Here in Chicago, we're proud to serve all 77 neighborhoods of the city, as well as the south and west suburbs. Our mission, whether you're in Chicago or in Tallahassee, it doesn't matter, is really to help small businesses get off the ground and grow, be successful. Our vision is that no one should be alone on their entrepreneurial journey, that everyone should have the resources they need to thrive as a small business owner. So we accomplish our mission and vision in two ways. One is education, which basically means free webinars and events like this one. We cover a wide variety of subjects that are really essential to small business success. Everything from writing a business plan to building a website. We also offer for free lots of important tools and templates on our website. But our core service, and I want to be sure you're all aware of this, is what we call mentoring. Free and confidential one-on-one mentoring with a SCORE volunteer or mentor, like myself, like our speaker today, people who have real-world experience and expertise in the world of business. We will help you, match you up with a mentor to work with you side by side, one-on-one, for as long as it suits you, as long as it helps you. You just need to go to score.com/Chicago and click on Find a Mentor. And that's the way you can take all the learnings and really apply them to your own business, to really customize it to your situation, and to have a partner, as we say, a mentor to work side by side with you so you're not alone on your journey. That's what we do at SCORE. This is part of what we do. We'd love to have many of you, if you like what you see today, to join us and sign up for a mentor. A couple of matters of housekeeping. Some of you have already asked this question. The copies of this presentation and the recording itself will be provided to all attendees. You'll get a link to the BACP website, and we'll take care of sending you copies of the presentation. Luntadilla has agreed to answer questions and left time for doing that at the end of his presentation. I suggest you put them in the chat or the Q&A, but usually the chat works better. We'll answer as many of them as possible. And finally, as I said before, to take it further for more in-depth personalized assistance, please sign up for a mentor at score.org/Chicago. Now, without further ado, I do want to introduce our speaker today. Luntadilla Paulo has been with SCORE for many years. His own professional background is as an accountant, and so he often undertakes webinars like today's to speak about specific accounting related issues. You may have your own accountant, but these are things, kind of general advice on how to structure your business the right way today's presentation is really one that Luntadilla has not done before, but red flags are things to check for in your tax return before you hit that submit button or drop it in the mailbox. Um, it promises to be a very interesting session. Luntadilla says he's learned a few things himself just in preparing today's presentation and learning about it himself. So I'm going to go out of view now. I'll turn the stage over to Luntadilla, one of our volunteers here with SCORE Chicago, and I hope you all enjoy. Thank you, and thank you, Luntadilla.
Thank you. Thank you so much, Steve. Thank you to our great city of Chicago, BCA, PC. Thank you so much for inviting me to come here to present on this important subject. I know for some of us in this call, it's going to be slightly heavy to hear some of the things that I have to share for those of us who is the first time, right, hearing me speaking, who are coming from other chapters across the US, I want to welcome you to our webinar. My name is on the screen. My name is Lunta Di La Paulo. Most people call me Paulo. I'm a CPA. I'm a SCORE volunteer. I run a CPA practice, a virtual CPA practice. We help business owners across the 50 states of our great nation. And today I have a topic that I've been thinking about it for some time now. I wish I could have done it maybe towards the end of last year or at least the beginning of the tax season. But we're here, and I'd love for you, if you already filed your tax returns, I would encourage you to have your tax returns in front of you because we're going to be covering things that will help you as you go through this webinar. You will be able to actually refer back to your tax returns and make sure, right, what we're covering actually is making sense to you. And, if you find any concerns based on what we'll be sharing with you on your tax returns, you will know what the next steps towards the end of this webinar. And before we begin, I want to put in front of us just a quick disclaimer here. This webinar is for educational purposes only. This is not to be taken as either an accounting, a tax, or legal advice or investment advice in any shape or form. Okay, we're providing you educational information for you to avoid some of the costly mistakes. We already see we have quite a lot of people from all over the places, so this is really exciting. And I want to thank you for taking the time to connect with us today. And I promise it's gonna be it's gonna be worth your time. So it seems like there is somebody who's not able to see the screen. Can you please, if you can see my screen, please confirm you can see the screen. Just put a one if you can see. Yes.
Everything looks
Okay,
great.
we're seeing a lot of yes. Okay, perfect. Great. So what I want to do today, as a starting place, right? Towards the end of this webinar, you'll really get the following information, right? You'll learn the difference between an honest tax mistake and a potential tax fraud. That's number one takeaway that you'll walk away with from this call. Uh, you know, I'm gonna be sharing a lot of my own experience with clients who come to our practice. I did a little bit of research through IRS websites, some of the literature from the AICPA, the American Institute of Certified Public Accountants, and there is really little secondary material. Okay. Um, Overall, when it comes to how you should review your tax return. So I'm gonna do the best that I can to really help you in the next 1 hour to get hold of what you should be looking at and what are the major red flags you need to be paying attention when it comes to reviewing your tax returns. And we talk to a lot of business owners every day. We see a lot of stuff that comes to us. Some of them are easy to correct, easy to fix. And in some cases, there are things that are really shocking to see other professionals, tax preparers doing on taxpayers' tax return. So the second thing that we're going to talk about is some of the top tax issues, how you'll learn how to review your tax returns the right way, right? When you file your tax return, when you give the tax preparer permission, what document you should be asking them keep as your own records. And if you suspect the fraud is taking place on your tax return, how you should proceed if that's the case. And last but not least, we're going to talk about how you should prepare yourself if you haven't filed your tax return yet, how you can prepare yourself moving forward. Okay. So we have quite a bit to go through. And, here's the people we're going to benefit the most from today's webinar, right? So if you filed a tax return and you got a really an absurdly high refund, more than you're expecting, to most of us, that's a yay moment. I'm happy. But if you feel like something is off with that refund, you're not sure why you got that refund, you probably need to review a little bit more your tax returns. If you are seeing on your tax returns credits or tax deductions that you never discussed with your tax preparer, this is the right place you need to be in this moment. If your tax return is showing a business, okay, whether it's a Schedule C or if your tax professionals added, a Form 1120S, 1120, for you, this is the right place for you to be, okay? If your tax preparer did not sign off on your tax returns, we're gonna talk a little bit about these ghost tax preparers as well. Okay. Or if your tax preparer is not okay, is not willing to explain what's going on your tax returns. So this webinar is really for you. And whether you are a business owner, a self-employed individual, a 1099, or you file a simple 1040, right? This webinar, it's gonna make a significant difference in your personal life, your financial life, and it's gonna help you sleep slightly better. So just to make sure, I'm speaking to the right audience. If you are a business owner or self-employed person, just put one in the chat. If you file only a form 1040, put two there, okay? So that we know the audience we're speaking with. Okay, thank you for the engagement. I love it. A lot of one, a few two there. So thank you so much. I really appreciate your engagement there, right? So the now that we get it, there is 1.2. That's an interesting one. I love it. I love it. So as we move along, right? So it's really important for all of us to understand that a tax return is a legal filing, right? It's a legal document. When we prepare the tax returns, right, we are essentially submitting a legal filing to the government, and it's a business document. There is a framework that we need to follow. Okay, a business tax return or an individual tax return, right, drives not only your tax bill, or it might contains elements that signals an audit, okay, but your tax return is often used if you are looking to raise money through an SBA loan, Uh, Steve mentioned here CIBC Bank, right, that works with the city of Chicago, right, that provides a little bit of financing to small businesses. So one of the things that you are asked in the underwriting process is your tax returns, the last 3 years of your tax returns. Meaning, if your tax return has issues, right, you are going to be shooting yourself on the foot. So it's really important. Number two, right, your tax return is also one of these things that if the IRS or your state government challenges the positions you took on the tax return, it might have a significant impact on your cash flow and you are not gonna sleep well. Because guess what? Taxes are on the list of the top 20 fears all of us live with in America, right? So it's really important that all of us are paying attention to this, and that at the end of the day, right, when we think about filing taxes, it's not only about compliance, right? It's not only about you know thinking about avoiding the fear, right? Okay, somebody put there, it's a forced obligation. True. Yes, it is one of these things that we don't have a choice. Okay, we don't have a choice, right? So we have to look at it into the right context. Now, here's one thing that a lot of us, when we get our tax returns, and even with my own clients, often I have to call their attention to this fact, right? Most of us, when we receive our tax returns, whether it's a Form 1040 or 1120, 1120S, 1065, or whatever form we're filing, right? We look into the tax return and we just, scan the tax returns and then we go into this part here, sign the return, right? And what we do is we put our signature and date and that's it, right? We don't really look into a lot of the details, right? I don't want to call anybody here, right, in this call, but I can already start to see that at least a number of some people in this call uh, are starting to identify themselves with the description that I just painted, right? You receive the tax return from your CPA, your tax preparer, your enrolled agent, whoever you're using, right? And you trust them and you just go ahead and sign it. But here's what's also written there, right? You write, on top of your signature, under penalties of perjury, I declare that I have examined this return and accompanying schedules and statements, and to the best of my knowledge and belief, they are true, correct, and complete, right? A lot of us don't even realize that, right? Um, I was speaking with Steve earlier, right? This webinar is not designed to scare people away, but it's to bring us to the realization that, hey, we need to take this just slightly more seriously and actually, you know, take action to protect ourselves, our family, and the businesses that we work very hard to build. So, if we have any lawyers here, they know the definition of perjury and they can tell us a lot more about it, right? But a perjury, right, is when you make a false statement under oath, right? That it's false and that declaration is material enough, is important, it's relevant enough to influence an outcome, right? So we're saying, hey, based on everything I know, this tax returns is correct. And I have examined this tax return, right? If we look into the dictionary, the definition of examining something is to analyze, to look closely, to compare, to contrast, to make sure that, based on certain framework, right? I actually verified this information and I came to the conclusion that here's the final judgment, right? And even if you use a professional tax preparer, you pay them, the government looks at you as the ultimate responsible to the tax returns. I'm a CPA. My clients trust me, and I always tell them, if you have any question about what we're filing for you, don't sign it until we meet so that we can review the tax returns together. And it's really important that we do that because when we look at tax return, we're really, entering a territory that is of high importance to all of us, right? Your access to financing, as I said before, quick recap here, it's determined on the quality of the information on your tax return. If you're not filing accurate tax returns, your compliance audit risk just goes up, right? And on top of all of this, business planning, right? Especially when you're planning for your working capital, you need to make sure that you have enough cash to meet your short-term obligations. And if you're hit with penalties, with interest, and now you have a tax problem that you have to hire somebody like us to help you, right? It could create disruption in your cash flow. So, friends, we need to take this a little bit more serious, right? You send your documents to the tax professionals, you're still held as the ultimate responsible for the tax returns. Now, I want us to look into what's an honest mistake versus fraud. And especially to those of us who use, not licensed professionals, right? It's really important for you to distinguish that because often we get clients who come to us and they file the tax returns, and guess what happens? The tax preparer stops answering them. They just disappears. Okay, they send emails, they call, and nothing goes, right? So what is an honest mistake? An honest mistake, right? There is a mathematical error, easy to fix, or somebody forgot to include, a W-2 or a 1099 or a business expense that was supposed to be added into the tax return, and somebody forgot to add it, or a deduction was placed in the wrong line. It's happened, it's human, it's easy to fix, right? Or your bookkeeper sent the wrong trial balance or profit and loss statement that needs to be updated, right? Guess what? Those are easy things to fix. Those are human, out of pressure, a lot of things going on. Yes, possibly, somebody made a really honest mistake. Now, there is a place where people willfully, take action, aggressive tax positions, or just outright they are committing fraud and they don't want to call it fraud. And we see this when people literally just begin fabricating expenses. Usually it's expenses, not so much income. We see a little bit of fabricated income just to help certain business or taxpayers say, hey, look, this is not a hobby. I'm actually running a business, and therefore here's a little bit of income for the business, and here's a ton of other expenses to help me, reduce my taxable income. Yeah. People creating business in their, we often see a lot of Schedule C with this kind of problem without any support, right? We have had situations where a taxpayer came to us, they were using a tax professional, that literally created a fake Schedule C on their tax return. We're gonna talk about that towards the end as one of the example that I'll show you. People claiming personal expenses or hobby expenses as business deductions. We see that a little bit as well. And at the end of the day, right, all of these kind of situation, right, are adding up to major problems on people's tax returns that in the long run, sooner or later, it's gonna catch up with them, right? Now, what I want to talk about now is some of the patterns, some of the tax issues we see these every tax season, even throughout the year outside of the tax season, right? People who are dealing with ghost tax preparer. Let me tell you guys what is a ghost tax preparer. A ghost tax preparer is somebody that you pay to prepare your tax returns, but they do not put their prepare tax identification number or their name or their contact information. Sometimes they don't even give you a full copies of your tax returns. When they give you a tax return, it misses schedules, it misses certain forms that needs to go along, right? Why? Because they don't want you to have a clear picture of everything. And when you come up to them, and usually this happens when you begin receiving an IRS tax notice or your State Department of Revenue tax notice, they are not responding. When they respond, they are evasive. They don't, seem to care about what's happening. We have seen the second tax issue a little bit. A little bit more in the last 2 years, right? Tax preparer will charge you based on the refund they will get for you. They'll tell you, I'm gonna get 20, 30, or 40% of the refund if I get you X amount of money. We often see that as one of these problematic issues because these tax preparers are going to include their bank account. This is not funny. It's sad, right? They will put their own banking details on your tax returns. When the refund comes, hits their accounts first, and then they send you the difference, right? Which is pretty much just illegal. They shouldn't be doing that. It violates a lot of codes, right? Especially Circular 230, right, which is the code of professional ethics and conduct that we have to follow as paid tax preparers. Okay, we see quite a bit of inflated deductions, right? Whether it's vehicles, meals, home office, supplies. And folks, please don't see this as me trying to tell you that you shouldn't be claiming legitimate tax deductions or credits that you are entitled to claim. We tell our clients, if you follow the rules, we're gonna take the position, the tax position. We're not gonna shy away. We're not the type of tax professional, CPAs, who run away from what is legal. If it's legal, it's ethical, will help you. There are many ways to save money on taxes, and none of them is a good idea committing tax fraud or violating the rules to save a few bucks. It ends up costing more in the long run. Um, we see sometimes people taking tax credits that they're not entitled to claim. And and often in those kind of situation, we recommend, hey, we need to file an amended tax return before we begin working with you for the new year. Some people accept that, other people don't want that to be done because they know they're gonna end up owing money. So, and we don't take these kind of clients. We already talked a little bit about fake Schedule Cs. Only two times I've seen fake Schedule E, right? Schedule E is used to report rental property or rental income. and royalty income, right? Schedule C is used to report schedule business income, right? Profit and loss income. Okay. And often what we see is people creating significant deduction just to claim significant amount of losses. That way they can make sure they are getting either a large refund or not having to pay any taxes at all. Okay. Uh, you know, it's I talked about these a little bit on the ghost preparers, right? Tax preparers who put their own banking information on your tax returns. That's one of these other issues that we have seen a little bit. So as we talk about these now, it's clearly obvious that we need to talk about, okay, what are some of these things that you need to be looking at when you receive your tax returns, right? That draft and your tax preparer asks you to sign so that they can e-file, right? Number one, you need to start with the basics one, right? The clerical stuff. Make sure the name, the social security numbers, the EIN are correct, right? The address, the filing status. If you're filing a business return, right, you want to make sure all of the business identifiable information are correct. The name of the business, right? Um, the location, and make sure the prepared signature is included there, right? The prepared signature is included there. Verify the banking information. This is really, really, really important because people often do not check this information. And sometimes it's not out of malice, right? People make a mistake. They change one digit in the banking information, and you don't get your refund because somebody was in a hurry and they messed up one or two digits, and suddenly the entire bank account number is incorrect, right? So you want to make sure that you're checking that portion of information, right? Number two, for especially business owners, you want to do an income sanity check. What is that? Right? The way we do it for our clients, right? We create a workbook where we are reporting the income that is showing on a tax return. We trace it to the income from their books, and we trace it to the supporting details. Especially if you have income from 1099, it's much, much, much simpler, right? We do a reconciliation. If you are getting like 5, 10, 1099s, we list the name of the organization that you received the 1099. We put the amounts you receive from each one of these organizations, and we do the we look into our tax return. Does it match? And then we look to the books of the client. Does it match the 1099? If there is any gaps or differences, we need to check with the clients why there is a discrepancy here, right? It's very important that you are checking your revenue and your income, right? Often we find discrepancies between the income reported from the bank statement and the income from the books. When I say the books, the profit and loss statement being produced by the accounting software, right? Why? Because some people never reconcile their books, right? They never do the reconciliation of the books. And as a result, there is gaps and discrepancies. So do that sanity check, right? Look at the expenses and ask yourself, are these expenses reasonable, right? Look at especially meals, travel, auto, home office. And one of my pet peeves is finding in tax returns other expenses. And you see a large amount just sitting there. That's an invitation to the IRS for audit me. Okay. That's just a simple invitation. Okay. Why would you put meals, travel, auto, home office expenses, and software, internet, and so forth. And then you have other expenses. Why aren't you classifying clearly, categorizing clearly these other expenses? Okay. It's really important for you to check those, right? And one of the things that I often talk to my clients, are these expenses reasonable in your industry? And that reasonableness, it's very important, right? I have clients who are financial advisors who cater to high net worth individuals, right? Often they can go in a restaurant and spend $200 for meals, one meal, right? And I have other clients who are in trades occupation. They are running, remodeling projects, right? They can go out for meals with one of their employees or one of the prospects, right? $50 is reasonable for an expense in their space. As long as you can justify your meals, your expenses, right? It makes sense, and your expenses needs to be reasonable within your industry. If you're claiming any tax credits, you need to make sure you have documentation, you met the eligibility criteria for those tax credits that you're claiming. Now, let's talk a little bit about the business structure. If you are a sole proprietorship, a single member LLC, right? You're filing a Schedule C. If you have a partner and you're filing, Form 1065, partnership return. Uh, Another problem we have seen in the last 3 years, right, is tax returns coming with a Schedule C when in fact they should have been filing Form 1120S or Form 1065. We have seen that quite a bit, right? And it costs people money. So, you want to make sure, some of these things are really you are reviewing this information, you're asking your tax professional really good question. If you're an S corp business, you are an S corp for tax purposes, you need to make sure that the wages, the salary is reasonable, right? Yesterday, I had a call with a prospect and they have a business generating over 600K in revenue, but they're paying themselves a salary of $50,000 per year and getting 250 in distribution. That's a major red flag, right? Why? Because the salary is disproportionately lower to what would be reasonable for somebody in a similar space, okay? Um, Doing similar type of work. So it's really important that you are paying attention to these kind of details. Now, the bottom line here, and I'm gonna repeat it, the bottom line is having documentation that meets the tax criteria, that meets the tax rules. Okay. So just to make sure you're not sleeping, please put a one if you're following and two if you're sleeping. Thank you. I see one. Okay, okay, 1.2 again. Nice, a lot of fun. So thank you for staying awake and following this presentation. If this has been helpful, if the information we're sharing with you is helpful, I appreciate you continuing to put those ones there. Thank you so much. Okay. Now, let's move on to what you need to be requesting from your tax professionals before you sign that tax returns and give them permission. Thank you. And give them permission to file the tax return. So, number one, you need to get a copy of the full tax returns, right? When I say the copy of the full tax returns, is really getting the tax return plus all the schedules and forms attached to them. Okay, so that's number one. You need to have the form 8879 for the purpose of signing, granting them authorization to file a tax return. Ideally, the tax preparer's information and firm detail is going to come on the tax return. And you want to ask them how they calculate the fees they're charging you, right? Some of us charge a flat fee. Some other practices have a formula to determining the fee for the professional tax preparation. So you want to ask that. Now, number four, you also want to ask for a list of all documents they use to prepare the tax return. This might sound like redundant, but here's why it's important to ask that, right? Some tax professionals, right, like us, we have a client portal where you upload your information. And what we do before we begin preparing the tax returns, we create what we call work paper for the client. We literally take every single tax document that you have sent to us, we put it in a single document, right? We take screenshots of every single piece of information we got from you, and we start reviewing it. Are we missing anything? Is there any inconsistency here? Some of the business data, we run some calculation to make sure it's footing, it's accurate, right? So we create these work papers, right, to give us when there is a need for a tax position that we need to take, an election that we need to make for the client, a credit that we are claiming for the client, we write, why the rationale for why we're claiming that specific deduction or tax credit or taking that position, and we share it with the client. Um, and another thing you need to ask the tax professional is the proof of the tax withholding or tax payments, right? At the federal level and the state level. And sadly, I've seen this at least three times, right? People putting estimated tax payment that they have never made to the government, right? I'm not sure why certain people think that's okay, right? And last but not least, if the information you're getting from your tax professional is not very clear, you should request a meeting with this tax professional. You need to request a meeting with them so that they can help you review the tax return, explain, if possible, every single, schedule and form, right? The last thing you want to do is to sign off on the tax return with things that you did not understand. Okay. Now, if you realize, okay, maybe something is off with this tax return, then you really need to move really fast. You really need to move quickly. Number one, what do you need to do? Download all of your information, all of your tax information. Go to your IRS account and download your tax transcript if they filed your tax return. If you got any IRS tax notice, make sure seek for help. Okay. If the tax preparer is becoming hostile, is not communicative, is being invasive, or refusing to be transparent, um, I would recommend that you stop communicating with them, but create documentation. Okay. Write everything that you can remember of the working relationship with that tax professional, what happened, when happened, and what you did next. Once you do that, right, you can actually get in a better place. Now, I want to show you some of these real life examples that that really happens, right? That has taken place, and I want to share with you so that you can see this is not something out of my mind only, right? So tax preparer not including their tax information. Actually, for this specific tax return, there was many, 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 many problems, right? This tax professional is not a medical doctor, even though This taxpayer isn't a medical doctor, but their tax preparer put them as medical doctor. They are IT professional, right? The tax preparer did not sign here their name, did not sign their signature, or put their tax preparer tax identification number. They just didn't do the basic. By the way, if you're a tax preparer and you did not sign the tax return, there is actually a penalty for not signing the tax return as a tax professional. So when you are reviewing your tax return, you want to make sure there is a signature there for the paid preparer. Okay. Another example here, right? By the way, this code that got entered here, this is another tax return that had many issues. This is the code for a hospital. They put this taxpayer as a hospital when they were simply a business consultant, right? A lot of mistakes in this tax return, and you can see this tax return, it has many signs of somebody manipulating information here. A lot of really perfect numbers, right? A lot of zeros here, right? A lot of zeros, right? Just, things that raise a lot of red flags. Um, Insurance for individual tax return. Uh, and by the way, this was health insurance. Health insurance, is not supposed to go here. And the tax return clearly says other than health, right? But they had this 1500 for insurance here. Uh, Car expenses here. These we realized was an inflated number. They spent 5,700 in travels. At least 70% of these ended up in personal travels. They had utilities here. They don't have a physical location. How in the world you have utilities here, right? When you don't have a physical office, right? You can claim utilities under home office deduction, right? If you follow the appropriate rules. But this was another big mistake here, right? So we see a lot of these kind of mistakes every year. Let me show you now an example of a fraudulent Schedule C that a tax return that a taxpayer came with these taxes, and then we started reviewing their 2022, 2023, and 2024 tax returns, right? These tax preparer literally created fake income and fake expenses that resulted in a loss of $109,000, right? Which provided the taxpayer a refund of 12K. But guess what? The taxpayer never saw the 12K. They only got a little over 6,000 with some changes. Okay. After we did the amended tax return by removing the fake Schedule C, they ended up with owing over 30,000, right? Because they are high income earners, and the tax professional they were using promised them heaven when they should have known better. And something happened the following year, right? In for the 2024 tax return, we amended it. One of their dependent identity was stolen, right? Why? They were using somebody they shouldn't, they should have never had business with to begin with. Okay. Really important for you to, you know, not mess with your tax situation, right? Not mess up with your tax situation. So, and the last example here that I want to show you is it taxpayer that filed their tax return using a Schedule C instead of a Form 1120S, right? They trusted somebody who should have done a little bit more due diligence to understand their unique situation. And guess what? We had to amend, excuse me, to amend 3 years of tax returns, right? 2020, 2021, and 2022 for them. Guess what? there is steep penalty for not filing your business return, whether it's Form 1065 or Form 1120. And by the way, if you have a partnership or you have an S corp, the due date for filing those forms was on Monday. So if you haven't filed your tax returns, right, Form 1065 and Form 1120S, please, right after this call, this webinar, find somebody to get those tax returns done. Great, somebody filed an extension. So that's very smart. Thank you, right? Unless you have an extension there. And by the way, make sure to request the extension, okay? Make sure to request the extension that got filed, whether or not it was accepted, okay? So when you don't file these forms, there's a lot of penalties. The more time lapses, the more money you have to pay. If it's the first time, often we can get the IRS to, waive a number of these penalties. Okay. But the cost is not only with the IRS. You're gonna need to pay somebody like me to help you file amended tax returns, and that's a lot of work, for you and a little bit of headache. So I would rather you not have to go through all these kind of nightmare-ish. Okay. Now let's look quickly into a case study here. Okay. That way we can actually wrap up and give you time to ask questions. Okay. So you know, we have seen this. I changed some of this data, right? A taxpayer, a single member LLC, they're making good money. They should have been a little bit proactive and you know, and figure out a tax plan ahead of the time to help them minimize their tax burden, right? But they're still doing things the same way they started. Their books are not reconciled, they don't have good documentation, and the owner didn't review examine the tax return before they filed, right? And they got a bigger, excuse me, tax refund. Right. And by the way, if you're getting tax refund, especially at this economic climate, you are wasting a lot of money, right? Because, a risk-free return is at least 4%, right? So when you get a big refund, you shouldn't be happy. You lent money to the government interest-free, right? You give them money, they're just giving it back to you. That's not good financial management, right? For a lot of my clients, I always recommend let's pay the most we have to pay to make sure we avoid underpayment penalties, and let's start setting aside some money on the side, okay? Setting some money on the side so that if we end up owing money, we can pay there, right? And not give the government, 9 to 12 months free money to use. And back to these, right? These taxpayer had a slightly higher refund, even though their profitability was unusually low compared to their operations. They had large other expenses and a lot of travel and meals with no really good explanations, right? After we begin, examining the red flags, right, the other expenses bucket that, I will insist you should try not to have a lot of other expenses there on your tax returns, right? Examining logs that didn't have any mileage logs, things, weren't really looking nice, right? A lot of their accounting details weren't really, in good shape. So, we produced, estimates of what that was going to look like for them, right? They were looking into, a tax exposure between 18 grand to 41 grand. And that's not really a place you want to be. right? When you are, generating 300K in revenue and your tax exposure potentially can get as high as 40,000, right? So definitely not a good place to be. So now the biggest question is if you are, in the presence of a situation like this, if a lot of the things we covered or even some of the things we covered throughout this webinar are starting to ring a bell, I'm seeing somebody here who mentioned this webinar is anxiety producing, right? If you're starting to feel nervous, okay, what are you supposed to do? You really have three options here, right? Number one, respond immediately. Especially if you got an IRS notice, right? You need to begin, looking for help ASAP. And this help might be in form of amended return, option two, or report, right? Especially if there is a case of fraud, which is something that I don't understand. Almost 90% of people that we have found fraud on their tax return, and we have recommended for them because of personal identity issues that may rise out of this or future complication. We recommended looking for an attorney, report to the police, report to the IRS, and amend their tax return, but they chose not to do any of the above outside of amending the tax return, right? So some of the people were a little bit suspicious themselves. I hope none of them is here. Uh, I hope, we have largely people who are, compliant with the tax and the tax rules and the law of the land. Okay. Sometimes it's really important to report, tax professionals to the police, to the state, you know, as a CPA, there is Illinois regulators, who oversee my license. If I act in a way that puts my clients in danger, I always tell them, hey, you can reach out to the state. They will be able to hold me accountable. And so far, none of that has happened. And we're going to continue doing the best for that never to happen, right? You need to know, if there is a problem, where should I go find help? If somebody committed a tax fraud, there is an IRS hotline that you can report. If it's a CPA, an enrolled agent, meaning a licensed professional, you can call your state authorities, okay? To make sure that everything people are being held accountable, because guess what, if it happened to you, it probably happened to somebody else and many other people. So want to keep our system safe for taxpayers. My job is to protect you, to serve you to the best of the professional conduct and guidelines that is out there in the market regulating us. So as we get to the end of this conversation, right? What you can do, if you haven't prepared your tax returns yet, here's some of the tips that I have for you or for the future, for the next year. Uh, Try to work with professionals who have a PIN, right? Prepare tax identification number, preferably people who are licensed, okay? Find a CPA, an enrolled agent, interview them, okay? Um, you know, have a call with them, ask about their experience, their background, you know, whether or not, they serve clients who have your, tax situation or business situation, right? If necessary, ask for referrals, check them online, look for reviews. Okay, today a lot of information is available online. If they say they are a CPA, check with with the state agency, right? Check with the state authority to actually see if their license is active or not. Okay, you know, almost every month there is a tax preparer who goes to jail or gets arrested because they committed fraud, they stole clients' money or did something stupid. Okay. Uh, you have to check the references, right? You have to check the references. You have to interview people. Okay. Always insist on the full copies of your tax returns and the e-file authorization. Okay. Review your tax return. This is absolutely critical, right? Compare your tax return from the last year and this year. Okay, what has changed on your tax return? Has your income increased or decreased? Are your expenses higher this year compared to last year? Try to make sense of the number. Don't, you know, folks, don't take the words of your CPA as the word of God. Okay. I tell the same thing to my clients. Okay. I am not God. If you don't understand something, schedule a meeting, right? We run a virtual CPA practice. It's easy to set up an appointment. You have my calendar link. Just book a call there at a time that is most appropriate for you. And then let's walk through the tax returns. Okay. So, one last tip here, right? If your goal is to just lower your tax return at any cost, you probably at some point make mistakes that will cost you money if you're not working with knowledgeable people who can actually help you reduce your tax liability legally. Okay. Your goal should be when you prepare your tax returns to have a defensible tax position. Okay. That the tax position you're taking is going to be, or it's according to the rules. Before you file, before you sign your tax return, please, please, please review your tax returns. If you feel like something is off about these tax returns, try to get a second opinion. Ask for a referral. Ask for friends. Who are you using as your CPA, as your tax guy, your tax advisor? Okay? Get a second opinion. So, Anna, thank you for choosing to spend time with us today. We have reached the end of our webinar. Now you can ask your questions. Thank you.
You're muted, Stephen.
Sorry about that. Thank you, Lontadilla. Hopefully, we didn't scare too
Thank
many
you.
people. We do have
I
some
hope not.
questions. We do have some questions that I noted
Yeah.
as you were talking, and I wrote them down. So, um, someone just asked, when you say without support, do you mean with no receipts?
Supports can be of many forms, and it depends on what you are telling the IRS this is accurate, right? So, uh, what makes up support for income, right? So depending on your type of business, some businesses must receive Form 1099 to support their income. Other businesses not necessarily, right? So support would be things like bank statement, right? Contract with clients, right? For us as CPA, right, we have signed engagement letters with all of our clients, right? And in the engagement letter, it states the fees they pay us. And that fee can be easily traceable into our accounting software, right? That's the makeup of support. So, an example of support for, let's say, a business trip, right? Okay, number one, where did you go? Was it for business purpose? How long did you stay? Is there any travel logs, right? What did you spend money on? Okay, airline ticket, hotel, meals in a conference for, my industry. Sure, if you have that, those makes up the support. Now, here's what is not tax support, right? For the sake of this conversation. We often see people, sending us their P&L. My bookkeeper did my bookkeeping, and here's the profit and loss statement. And we start asking them, okay, where is the support for meals? They don't have anything, right? They think the support is the profit and loss statement. That's not support. Support for meals, right? You have the receipt, and in your receipt, it should tell us that you had meals with client, with a business partner, with a prospect, with an employee on this day to discuss this matter. That's a support. Okay? Steve, I hope this helped clarify certain things.
I think so. Another
Yeah.
question, and I'm not sure it could have been meant in jest, but someone at one point on this call
Mhm.
posted, well, the federal and state governments know what we owe, so why make it so complicated?
That's a really good question. I would revert that to the Congress to answer. Um, my job is really just to help people follow the rules and avoid unnecessary headaches and hopefully, help them save money on taxes. You know, uh,
Okay.
I can't talk about things that I don't understand. Sorry, probably not a great answer, Steve.
No, I was thinking too, and maybe
Yeah.
you can comment on this. The federal state government may know what we earn, but they don't know all of the deductions. And actually, by filing taxes yourself, you can literally lower the amount that you otherwise it would appear you earned. Does that make sense?
I can see that. Yeah, absolutely. You know.
Um, Thanks. This was a comment. Um, Somebody said
Hmm.
anyone with a business should be savvy enough to vet who they go to. And if you get a bad feeling about this person, you would jump ship or change course. Trust your gut. That's not bad
Yeah,
advice, I don't think.
yeah,
Um,
yeah, yeah.
this is an interesting question. Somebody asked, I just started my business last year, didn't have much money to report for taxes until this year. So I want to start filing
Hmm.
this year. Will I get in trouble for last year when I did not report?
That's one of the many times, we encounter folks who, maybe don't literally they didn't make much money, but they spent a few $100 with startup expenses, and they simply miss that, right? Those are legitimate tax deduction that you are entitled to claim, right? The articles of organization you file, a CPA or an attorney you pay for, consultation, right? Um, I don't want to say yes or no that you'll get in trouble. Often the IRS or the State Department of Revenue don't even reach out for months or even years. And one day you just get a tax notice. You weren't expecting it, you know. Yeah, but I would say if you're worried, just amend your tax return to amend the 2024 tax year and move forward. Okay. And also make sure, if it's a business return, right? Are we talking about a Schedule C or a Form 1120 or a Form 1120S or a Form 1065? If they are the latter, right? The last three, then most definitely you probably will be in trouble, right?
Lenzadilla, at a couple points you referred to like industry standards, like what industry
Yep.
you might
Yep.
be in. Um,
Hmm.
and somebody asked a question. I think this is a paraphrasing of their question. Um,
Yeah.
how do you find out what industry standards are, or what, for example, is a reasonable salary in your industry?
Hmm. There is a lot of resources we use. So the IRS has an audit standard, right? So we often look into what the IRS considered reasonable, right? One thing that I learned early in my career is the process of reverse engineer, right? I would look into how the IRS audits a tax return. And then I'm gonna go replicate what they look for as a safeguard for my clients. Okay. So the IRS has this audit guide that for different industry. That's number one. Another another research from the IRS every year, right? They release statistics for different businesses. Okay. How many tax returns were filed? What were the typical expenses for different industries? Okay. That's another resource that we use. Another resource we use, especially when it comes to reasonable compensation or, reasonable salary for people, we look into the Department of Labor, right? We look into the statistics of how much people are getting paid. We look into government like per diem, for example, right, to get this kind of information. And we create, ranges, where we would expect, people to be in. And, if you're a $1 million business, here's how your P&L typically should be looking like, right? If you are below half a million business in revenue, here's most businesses similar to yours. Here's what the government is saying they fall, right? So we're gonna compare you with what the average business in the industry, of your size would look like. Okay. So those are some of the numbers we look at when we are advising client or providing help or showing them what's out there in the marketplace.
Um, this is an interesting question that just came in.
Hmm.
Um, from the point of view of the IRS. Um,
Hmm.
are tax returns by being audited these days by actual human people, or
Hmm.
is the IRS using either artificial intelligence or a set of algorithms to detect things that are out of the ordinary, things that might be fraudulent?
Yeah. Uh, the starting, I talk with people who work at the IRS. I attend IRS trainings. And one of the things that you will learn as you speak with these folks, or even as you do research, is that your tax return, especially today, right? The vast majority of tax returns are e-filed, meaning goes to the IRS system, right? And that system is designed to flag certain inconsistencies, certain, problems, and in some cases automatically sends letters unless the system is not sure. Now, I'm not sure if that system includes an AI or not, right? Today, AI is being widely adopted, but we know it's softwares that detect these issues. If there is something that a human needs to look at, then the system sends it to the batch of the IRS that is being reviewed by human. Okay. So that's the process. And then the humans will determine whether or not this requires additional follow-up or not, or it was simply, a system, red flag that it's not too important. you know,
Okay.
that's typically how this works.
Thank you.
Yeah.
Two other questions that I picked up on. One is it's not necessarily related to fraud or other
Yeah.
issues you were discussing, but what are
Hmm.
the options for two-member LLC to compensate its members or startup founders? That is guaranteed payments versus distributions.
That's really up to, the operating agreement of the members, right? If the operating agreement establishes guaranteed payment, then the members get guaranteed payment, right? Which is still subject to self-employment taxes and federal income taxes, and if applicable, state income taxes, or in some places, right, local taxes as well. Um, the distribution, it's what you'll get regardless, right? If the business decides that you get a distribution, you get a distribution. Guaranteed payment is something that the partner have to decide. That's more an inside, decision than more so, an IRS rule. There is nothing that stipulates that you must pay yourself a guaranteed payment as a partner.
Another question that I think has some general interest, and that is,
Yeah.
at what point should a business switch from using a system like Intuit, for example, or QuickBooks
Hmm.
to do their
Hmm.
books and calculate their taxes to a tax professional? Is there a
Um,
is there a rule of thumb or
oof. I'm sure somebody probably came up with rule of thumbs for that. But I'll share my experience. I have clients who have, a straight Schedule C, I mean a straight Form 1040. They started working with me when they were filing as non-resident. They love the work we do for them. Their tax situation is not complex. They still choose to pay us, even after becoming US residents, right? They still prefer that we take care of the tax preparation. And they are people who, don't want anything to do with a CPA like us. They prefer to take care of their own tax preparation on their own. Here's now what right. If you're confident, if you understand the tax code enough, your tax situation is really simple. Something like you have a W-2, maybe dependent, and that's it. Um, I think you can still use these softwares to prepare your tax returns. Now, if you have a business return, right? Technically, you still could, use these other tax software, but I would encourage you to sit with a tax professional to train you at least the minimum of the tax code so that you can do it yourself well. Okay? Uh, Otherwise, I strongly encourage you to use a tax professional, not only from the tax compliance perspective, but especially, right, for tax planning perspective. When I'm preparing tax return, there are certain things that jump out to me, right? That when I'm sending that handoff email to my clients, right, I let them know, hey, I see your income increased from 200 grand to 300 grand, right? What happened here and how are you using this extra income that came to your life? Certainly, there are ways to make this money work better in your favor, right? What things can we do to help you reduce your taxable income here? When you use a tax software, you don't have this level of insight, right? But when you work with somebody, I'm also not saying that all tax professionals come will give you the type of insights that often our clients get, right? Because, there are people out there who are just entering their data into the tax software, calculate and send you the return. Uh, and if your tax preparer only does that, you need to have a conversation with them. You need to ask them questions. Hey, what are you seeing on my tax returns that, you know, we could probably do differently, right? If you have, for example, an increase or a decrease in income, but your tax bill continues higher, right? Okay, how can you help me, create the balance here, right? What other opportunities can we look at on my tax returns to help me optimize my tax situation? Or can we put you in touch with a financial advisor to help you, allocate better your resources to help you grow your wealth, right? I have clients that I have told in the past, listen, the refund you're getting, if you add just a little bit of money, it could serve as a down payment for a rental property that you can purchase and you can build your wealth this way, right? I have clients that I have encouraged to invest in real estate as a strategy to help fund their kids' education in the future, right? And some of them have followed the advice, others not, right? But those who have followed the advice, right, they are in three, four properties because of the tax savings that we get for them, right? So, you know, I don't wanna add too much on this topic, but at the end of the day, you really have to measure the opportunity cost, right? This is a really important concept in economics. The opportunity cost, right? The cost of taking one course of action, it's gonna cost you another thing that you're not looking at, right? That you're giving up. If you choose a tax software, the sad thing is you don't know what you're giving up, right? Or you might not be giving up nothing, right? If your tax preparer is not bueno into giving you advice.
We have time for one more question.
Um, do you have one you want to ask Jerry, or I see one here? Um, this one came in just a couple of minutes ago. Are returns that are filed on paper audited
Mhm.
more than those that are filed electronically?
Typically, the answer is yes, because it lands on humans' hands and they are scrutinizing, especially for high income earners. Yes, right. So if it goes e-file, the system has certain parameter that is supposed to look at, right? And those things that are not outside of the scope of those, excuse me, those parameter, the system just lets in, no flagging, nothing, right? But a human is looking into the entire tax returns, right? Like, okay, this is a good one. Yeah.
Um, I think we're out of time. We're not out of
Yeah.
questions. There are more questions coming, but
Yeah.
Well,
sorry we can't
Although,
get to them all.
no worries.
I appreciate how provocative, I suppose, your
You brought a lot of
presentation
thought,
was.
lots of thoughts,
yeah,
and
thank you.
getting so many. Thank you so much. Thank you so much. Great information. Great information. So I want to thank both of our presenters, Scores, always, and Sedilla. Thank you so much. And thank you, attendees. We
Appreciate.
appreciate you guys logging on. Wishing everyone a nice, happy, warm, cold, I don't know, some kind of great weather today. Everyone
Great.
have a great night.
Yeah, yeah.
Thanks, Geraldine. Thanks,
Thank you.
Lentadilla.
Bye bye.
Appreciate it very much as
Thank
always.
you.
Bye
Thank you
bye.
so much.